Okay, so we will start shortly, so please be patient. I'm just adjusting some settings and we will wait maybe another minute or so, just in case if someone is late. So, okay, just finishing up with some checks. Okay, so I think we are ready to start. Hello and welcome to Sunday's live stream. My name is Ivo, and like always, I will do a quick overview of some of the key markets like stocks, crypto, and commodities, and then we will do a Q&A where I will try to answer some of your questions. Please put your questions in the chat or on our Facebook page. Before we begin, I just want to make a quick disclaimer that nothing in this video should be considered as trading advice. This video should be used only for informational purposes. So, without further ado, let's begin with the overview. Like always, first I want to take a look at interest rates, which help us determine whether we are in a deflationary or in an inflationary environment. And the benchmark, of course, is the US 10-year. Declining yields, and especially negative yields, mean that financial conditions are tight, while rising interest rates mean that we have loose financial conditions. Last week, we looked for the US 10-year to register a low and then begin a five-wave rally similar to that from early this year. And given this week's impulsive break above 191 basis points, a complex correction labeled WXY likely ended slightly below the prior fourth wave low of two lesser degrees near 170 basis points, which is also about a 50% retracement of the entire rally from this year. The prior high at 206 basis points and the upper trend line of the channel near 221 basis points are near-term objectives slash obstacles for the US 10-year. Old resistance near 191 basis points should now be support on any pullbacks near term. Yields will likely gain upside traction once channel resistance is overcome, but we expect this to happen in wave 3. Currently, we are still tracing out wave 1 that should terminate between the prior high and the upper trend line of the channel. 246 basis points is then our next upside target. Rising yields are generally associated with a weaker dollar. So now let's take a look at euro dollar. Okay, so as we discussed previously, we are assuming that prices are completing a large degree flat correction for intermediate wave 2. And this week, prices tested an important trendline that connects the lows from 2017 and 2020. This trendline held, and it should remain strong support as we look for a bullish reversal in intermediate wave 3. An impulsive break above the central line of the channel formed by wave C would be an initial bullish sign. Going forward, we need to see a break above the upper trend line of the channel to establish that a trend change is underway. I have outlined the ideal near-term trajectory on the chart. An initial 5-wave rally back towards the prior 4th wave high near 115, and then a corrective pullback. This will be compelling evidence that the trend has reversed higher. Next up are S&P futures. We still view the decline from the top as corrective, but there is still nothing to suggest a low ascent. On the contrary, the continued sideways price action is starting to suggest that prices may have completed a larger bearish triangle for wave X. This implies another decline towards the lower trend line of the corrective channel, which currently comes in at about 39.22. A decisive break below the BD trend line supports this short-term bearish view. Further to note, wave E of the triangle is very close to 62% the length of wave C, which is a common relationship in triangles. Although the risk in the S&P remains to the downside, this doesn't mean that we cannot find any good opportunities in the markets, but more on that a bit later, as we take a look at gold. But before that, I want to take a quick look at the energy sector. I'm using the XLE ETF as a proxy. Overall prices saw an uptick since last week, which is in line with our bullish view for wave 3 of 3. The Fibonacci cluster at $89 to $92 remains a strong upside target heading into Q2, so expect further upward pressure in oil and gas prices as well. Okay, so now let's touch on commodities. I'm using the Invesco Agricultural Fund as a proxy, or the food ETF as I like to call it. Since the global financial crisis of 2008, commodities have been in a downtrend, but shortly after the corona pandemic, commodities and yields reversed higher. The break of the 12-year downward sloping trend line suggests that the trend has reversed to the top side. We got a nice retest in wave 2, and currently we are accelerating higher in wave 3. This is common in breakouts where old resistance becomes support. The 1.618 multiple of wave 1 at $31 is our target for 2022. So this implies about a 40% increase until the end of the year, which sounds concerning to say the least. Okay, so before we jump to gold, which was actually the most key market this week, we are going to touch a bit on gold, on crypto, and of course Bitcoin more specifically. So in order to get bullish on Bitcoin, we need to see the S&P set a low as well. Until then, the prospect for more downside activity in Bitcoin remains intact as well. Prices here largely remain locked in a sideways range, which is consistent with a developing triangle as outlined by the converging trend lines. We tweaked the wave count accordingly. We look for one more decline into basically a downside resolution towards the prior fourth wave low and the 62% retracement of primary wave 3 at 28,445 to 28,844. And this zone, although we expect it to be tested, it needs to hold, otherwise this would bring much lower levels into focus, like the wave 1 high near 19,861. This could also spark a huge rally in altcoins like which was the case in the previous bear market, which of course brings us now to XRP, which is one of my favorite altcoins. And I'll just do a quick recap. So in XRP, we assume that we have completed a large degree bullish triangle for primary wave 4 that should be followed by a rally to new highs in wave 5. Post-triangle thrusts are often aggressive in nature. A good example is the spike rally in 2017, which was about a 15x. So also notice that the low point of the triangle acted as support to the subsequent decline. This is another supportive feature of this wave count. And now let's take a look on a smaller scale. So essentially, we got a breakout to the upside from the corrective channel formed by wave 2, finally. This suggests that minor wave 3 is in its very early stages. The next key objective for the bulls is overcoming the wave 1 high and the BD trend line, which come in at about 91-92 cents. So a forceful break above this level would be strong evidence that the larger uptrend in XRP has resumed. $12 is our target for 2022, although we can achieve even higher levels, but let's take it one step at a time. Okay, so Now let's finally jump to gold, which was probably the most interesting market this week. The solid break above the wave 1 high near 1974 supports the bullish view for wave 3. Prices then came down to retest the wave 1 high, which is typical for breakouts, and the wave 1 high now should be strong near-term support. We remain bullish gold heading into the new week as we look for wave 3 to ultimately target the Fibonacci cluster into the 2192 to 2225 area, which includes the 1.618 multiple of wave 1. Of course, we have higher targets projected on the chart for intermediate wave 5, but this could be a story for later this year. So this target here is the focus for Q2. Okay, so now I want to take a look specifically the chart of the S&P versus GDX, which is the gold miners ETF, which I have here on the right side. But what this chart implies essentially is probably another down up down sequence to complete 3 waves down for wave E of a large degree bullish triangle. So this essentially means that the S&P should underperform GDX. So we should look at GDX and the individual miners for better opportunities in the short term and probably this year overall. So as we can see, wave B, C, and D have clear 3-wave structures, so we expect wave E to trace out a similar 3 waves down, because so far this decline looks too shallow and too brief to be the whole wave E. And this is our wave count for GDX, where we have completed a complex correction with a triangle in the wave Y position. Intermediate wave 2 was a bit shy of a 62% retracement of wave 1. Near term, the wave X high is acting as resistance, which one could expect as key levels rarely break on the first attempt. Near term, I expect any pullbacks to be limited by the 35.80 to 35.10 area. Ultimately, I will be looking for intermediate wave 3 to travel well above the wave 1 high near $46. And let's make a quick projection. Excuse me, I've been feeling a bit sick, but I did not want to miss this week's wrap-up because I feel that it is very important given the recent market opportunities. So yeah, the 1.618 multiple of wave 1 comes in at about $77. So a reasonable upside target to watch this year, and this would translate into about 100% gain. So, but I think we could find even better opportunities in individual stocks. And this is what are we going to take a look right now. I'm going to take a look at several individual stocks of miners and their bullish wave patterns as well. Okay, so let me just load my next screen. So yeah, the first miner I'll be looking at is Exelon Resources, or EXN. And the pattern here is pretty straightforward. We have traced out an ABC pattern, which likely ended near 60 cents. Wave B is a triangle, so we would expect ultimately this pattern to be fully retraced in the next maybe couple of years or more, because this pattern took more than 10 years to unfold. So the next rally should be at least maybe 5 to 7 years or more. Okay, the next one is Northern Dynasty Minerals, or NAK. So here the interesting thing is that we had 5 waves up from the low in 2016. This 5-wave rally was then followed by a pretty complex correction, which took about 5 years to unfold. And an interesting pattern that I see here is that wave X ended near the wave B high of the prior zigzag, which is common for complex corrections. The recent sharp rally is starting to suggest that this whole correction, this 5-year correction, is complete. But of course, I would like to see some key levels broken to the top side to ensure that a trend reversal is underway. Initially, I would like to see this B wave high broken, and preferably I would like to see a 5-wave break followed by a 3-wave setback. This would of course set the stage for another 5-wave rally, and I would ultimately expect this whole correction to be fully retraced. And if we take our measurement tool, a rally back towards the prior 4th wave high from nearby levels would be about a 6x, which is a better opportunity than just buying the GDX instead. Okay, so now the next one is Great Panther Mining, or JPL. Here we have a very, very interesting pattern, which is one of my favorite patterns. This is the ending diagonal in the C wave position. So this essentially implies a sharp reversal back towards the origin of the pattern. So this pattern took about 11 years to unfold. So the guideline for ending diagonals is that this diagonal should be retraced for less than half of the time it took to unfold. So we can expect in the next 5 to 6 years prices to climb back above, slightly above actually $5. So yeah, this is an initial projection, which is about a 14x from nearby levels. So yeah, this is a stock that I really like, especially given the textbook quality of the pattern here. And of course, very near term, I would like to see an initial 5 waves up towards the 54-cent mark, and perhaps then a corrective pullback to set the stage for another rally. The 2-4 trend line will likely act as near-term resistance, but of course it should be ultimately overcome. Okay, so now let's jump to the next one. This is Endeavor Silver Corporation, or EXK. So the interesting pattern about this stock is the triangle, which is again another high confidence pattern that should ultimately be fully retraced. Since the triangle prices traced out an initial 5 waves up for wave 1, which was then followed by an expanded flat with a diagonal in the C wave position. Keep in mind that all these charts that you see are on a log scale. So wave 2 was an almost exact 38.2% retracement of wave 1, and the recent sharp rally suggests that wave 3 is in its early stages, and an initial upside target for wave 3 is $23, where it would achieve equality with wave 1. But of course, we know that third waves typically exhibit a 1.618 multiple of wave 1, so a solid break above $23 will likely then target $75, the 1.618 multiple of wave 1. And if we switch this chart to an arithmetic scale, we will see that intermediate wave 2 was a typical 62% of retracement of wave 1. Okay, so next one. Okay, just take a quick look at the chat. Okay, so we have some questions, but we will take a look at those when I finish the miners. Okay, so next one is a new gold, NGD. The count here is also pretty straightforward. We completed an ABC pattern at the Corona low near 40 cents, and since then prices staged an impulsive rally for wave 1, which was then followed by a corrective pullback, about a 50% retracement of wave 1. Very near term, I want to see this downward sloping trend line broken. So it currently comes in at about $2.20. So this trend line, of course, we don't expect it to be broken on the first attempt, and it will likely serve as near-term resistance. But a solid break above this trend line likely then targets $6, where wave 3 would achieve equality with wave 1. And going forward, a solid break above this level likely then targets the 1.618 multiple of wave 1 near $19. So yeah, this is another, I would say, high confidence wave count. Okay, next one. Silver Corp Metals, or SVM. And here we even have a more bullish setup than the other miners, I would say. Excuse me. So here I'm tracking a couple of ones and twos of the 2016 low, where both second waves are flat corrections, which I would like to see when tracking a couple of ones and twos. Minor wave 2 was an almost exact 62% retracement of wave 1, and it also came very close to the upward sloping trendline that connects the 2016 low and the Corona low. So going forward, I'll be looking for a sharp move higher in a third of a third impulse wave. The wave 1 high near $9 will likely act as near-term resistance. So ideally, we will complete an initial 5 waves up near this level, and a corrective pullback will likely then lead to a strong move higher in a third of a third impulse wave. The Fibonacci cluster into the $50 to $56 area is a strong upside target for possibly the next couple of years. This would imply about a 11x from current levels. So yeah, another interesting stock to maybe add to the watch list. Okay, so next one is Dorado Gold Corporation, EGO. Here we also have a more bullish setup, a couple of ones and twos against the 2019 January low. The wave 1 high near $14 is a near-term obstacle, so a solid break above here will likely add upside traction in wave 3 of 3. The Fibonacci cluster here is our target for 2022, which comes in at $49 to $53. And of course, once achieved, we'll begin to watch for a corrective pullback and then another rally. So as we can see, most of the miners display similar patterns, a completed long-term correction, and we are currently in the very early stages of a multi-year bull market. And I have maybe a couple of more left before we wrap up. Next one is Yamana Gold, AUY. So here we have a completed bullish triangle from which prices traced out waves 1 and 2, where we have an ending diagonal in wave 2. So wave 2 is not quite, it's a bit above a 50% retracement of wave 1, which is again a common relationship in second waves. So very near term, I would expect prices to stall near the wave 1 high near $7, but ultimately the $11 handle should be easily achieved in 2022. And Of course, a solid break above this level will likely then target the 1.618 multiple of wave 1 at $23. Okay, next one. Barrick Gold Abx. So yeah, here we have an almost identical setup like in Yamana, where prices completed a large degree bullish triangle, which was then followed by waves 1 and 2. Wave 2 is a very good flat, a very crisp flat correction with an ending diagonal in the C wave position. But here wave 2 was a bit above, ended somewhere between the 62 and the 78.6% retracement of wave 1, so a deeper retracement. And of course the wave 1 high is an initial objective here and a near-term obstacle. Above there adds upside traction in wave 3, which would achieve a typical 1.618 multiple of wave 1 near $85. Okay, and now the next few miners I will take a look at are, I think they are mining iron. So iron ore producers or miners. So yeah, expect different patterns, but bullish patterns nonetheless. So yeah, from the top in 2010, we have traced out a 535 pattern labeled ABC, a simple zigzag. We have an almost perfect corrective channel where the correction ended near the bottom of the channel, and the upside break of the channel hints that a bullish reversal is underway. Waves 1 and 2 are complete, and currently prices are flirting with the wave 1 high near $22. Also notice that wave 1 ended near the 78.6% retracement of wave C. This is typically what I would like to see when tracking a reversal to the either to the upside or to the downside, where I would look for the initial 5-wave rally or decline to terminate at or near the 62 or 78.6% retracement of the prior decline or rally. So prices here will likely gain upside traction once resistance near $22 is overcome. An initial target is the equal legs level near $70. A leap above this level then targets the 1.618 multiple of wave 1, which comes in at $237. So again, this is another very interesting stock which has about 10x potential from nearby levels. Okay, so next one is Vale, but I will switch to an arithmetic scale because these charts look better on an arithmetic scale, unlike the other miners where the chart looks too squished if I just look at it on arithmetic scale. So that's why the prior charts were on a log scale. So here, of course, we have a similar setup. Prices completed a long-term bear market from 2018 labeled ABC. And from the low, prices traced out a couple of ones and twos where both waves intermediate wave 2 and minor wave 2 were about a 62% retracement of the prior rallies. And the next big move, of course, should be higher, a sharp and aggressive rally in wave 3 of 3. A near-term obstacle here is the wave 1 high near $23. A leap above this level should add upside traction and then target the Fibonacci cluster into the $38 to $43 area. Also keep in mind that this stock also gives a pretty good dividend. I think the last payout was about a 22%. So dividend yield. So yeah, just keep in mind that this is also a very good stock to hold long term. So while waiting for prices to achieve the targets, you will also be getting a pretty good dividend while waiting. Okay, and finally, let's take a look at Rio Tinto, RIO, Rio. So here we have completed a long-term bullish triangle from the top in 2008. And against the triangle, prices traced out waves 1 and 2, where wave 2 was an almost exact 62% retracement of wave 1. As I mentioned previously, this is a common wave relationship. The wave 1 high here comes in at $95, $96, so expect resistance near this high. Once overcome, prices should gain upside traction and ultimately climb to new highs to achieve a 1.618 multiple of wave 1 at $157. Okay, so this concludes my presentation of the markets. So now let's take a look at some of your questions. Okay, so I see we have Mohammed in the chat. Welcome again, welcome. Okay, so Mohammed wants me to take a look at HRHO. So just give me a moment. Okay, so this is an Egyptian stock, financial group, Hermes Holding Company. Okay, so let's take a look here. Yeah, so before discussing the wave count and what probabilities we have here, I just want to mention that rising yields are typically bullish for the financial sector. So if you recall our wave count in yields, we expect yields to move significantly higher this year, so this should be bullish for financials. Okay, so now let's take a look at the pattern here. Okay, so this stock topped out at 2006, and since then it has been pretty much a sideways mess. Okay, let's switch to log scale. Okay, so I think we have somewhat a clear pattern here. Let me just do a quick measurement and put some channels to see whether this is the case. So what I'm thinking here is that price is completed maybe on a complex correction, or maybe a flat. Let me see if this looks okay initially. So I'm not sure, but if can we label this as maybe an ending diagonal, and we have labels A, B, and C to complete maybe a flat. Because I don't have any problems calling this a completed correction at the 2013 low, because since then prices have been experiencing a series of higher highs and higher lows, and to me this is a very bullish setup. I would definitely consider this as a couple of ones and twos that should ultimately be followed by a strong move higher in a third of a third impulse wave. So if we do the reverse Fibonacci projections, we will have some key levels to watch. Okay, so yeah, let me just switch to an arithmetic scale just in case, because these targets get too aggressive on a log scale. So yeah, the 50 and $70 handle I would consider as reasonable upside targets in the next maybe 2 years or more. I guess it could take maybe even up to 5 years to reach these targets. It depends, because yeah, the past bull market was definitely a parabolic one. So this sharp rally is definitely something that we could expect here as well, given the prior structure. As I said, the next big move should be higher a rally in wave 3 of 3. So something like this could be experienced here. So the 50 percent, so the $50 target could be achieved maybe in the next year, or maybe this year actually. So yeah, but definitely a good stock to watch. Okay, so now, yeah, I see we have a question about RMDA. Okay, so this is another Egyptian stock from the pharmaceutical sector. Okay, so yeah, again, something to note about the pharmaceutical sector. I believe it was 2012 when the pharmaceutical sector topped out, and since then we have been in a strong bear market, and I believe that this bear market has either complete or nearly completion, judging by the U.S. Pharma stocks, of course. But I just wanted to say that this is another sector that I really like, and I expect it to be very bullish in the next 5 years or more. Okay, and so yeah, let's take a look at this stock. I'm not sure, but didn't we checked the stock last week. Not sure, but okay, so not much history here. Yeah, this, I don't know what this is, but this spike looks odd to say the least. But okay, let's do our FIB projections as always. So, oh, yeah. So it's pretty nice to see that prices came down, yeah, came a bit shy of the 62% retracement and then reversed in what appears to be maybe in an impulsive manner, but yeah, it's definitely an open question. Let me just take a closer look at this rally from the low. So yeah, we can count 5 waves up, although overlapping. So yeah, as I said, it's an open question whether this rally is impulsive or not. So I would like to see more follow through to the top side and of course a break above these prior highs in a forceful manner to establish that this stock has bottomed long term, and the next few years prices will be heading higher. So yeah, the prior highs near $2.30 and $2.50 are key resistance levels to break. So upside acceleration above there would definitely help build the bullish case for this stock long term. And let's do a couple of projections more to the top side. So again, my favorite Fibonacci technique. I'm projecting a reverse 1.382 and 2.0 multiple of the latest of the entire decline from the top in 2020. So an initial target for this stock would be lies at about $5 and then the $6 handle. So yeah, this would be about maybe a 3x from nearby levels, and of course we could reach even higher levels. As I said, these are all only initial targets. So if this would be the case here, if let's say we assume that the recent decline was only wave 2, I would definitely look for wave 3 to target the $8 handle. And if I project a 1.618 multiple for wave 3, yeah, it comes in at $7. So yeah, this zone would be a strong upside target for this wave 3. Okay, so we have a couple of more. Well, yeah, we have a question regarding this correction. So it's hard to say whether this correction is complete. As I said, I would need to see the prior highs taken out to consider this correction complete. So I would need to see something along these lines to consider this correction complete. Okay, let me just draw my reverse 62 and 78.6% retracement of this decline. So for me to consider this correction as complete, I would need to see something along these lines: a 5-wave structure followed by a 3-wave setback, and then another rally that that exceeds this high. So I would consider this to be a pattern that would hint this correction is complete. So in essence, I would need to see a move of about equal weight in the opposite direction to conclude that this decline is complete. Okay, so we have more Egyptian stocks. Okay, the next one is EGX30. So yeah, I think this is the Egyptian index. Okay, let's see what we have here. Okay, so let's see. It's tough, but I can probably easily call this maybe a triangle. And we are currently tracing out a five-wave structure, but we have an overlap of the prior high. So let me just draw my trend line here. Yeah, so okay, so let's start with what's clear. The thing that's most clear here is that the latest pullback is corrective. It's only in three waves and contained between parallel trend lines, which is a key characteristic of corrective moves. So, and yeah, lately we have been breaking to the upside. So yeah, I would consider that this decline is complete, and of course confirmation for this would be a return above 15 to 80. So yeah, a return above this level would confirm that this correction is complete, and targets, probable targets, would then be 22,397, and a solid break above here will likely then target the 2.0 multiple at 28,730. As for the structure before the triangle, I'm not quite sure what we have here. There could be missing data, but I would assume that this is a 1, 2, 3, 4, 5, maybe a third wave, and this is probably wave 4. And yeah, the structure following this maybe triangle, maybe we could make it a smaller triangle. So yeah, the way I would view this is either a diagonal, which I prefer to count in retrospect. So my preferred count would be probably 1, 2, 1, 2, and we should be heading higher in a third of a third impulse wave, which of course, if this is the case, these targets would be easily achieved in the next couple of years. Okay, so let me see if we have more questions. Okay, so the next one is EGTS, Egyptian for Tourism Resorts. Okay, so okay, so yeah, pretty nasty decline here following this sharp rally in 2005 to 2007. So let me see what we have here. So it's Well, I can't say uh, we have a clear pattern here, but I would definitely play around with the idea that we could be completing maybe a bullish triangle fourth wave, but I can't say that I have much confidence in this wave count. So key support for this wave count would be what is this, the 98 cents handle. So yeah, this prior low is key resistance. It needs to remain intact to keep this triangle potential intact. So yeah, but if this is the case, this would imply a very decisive move to the upside. As you know, moves following a triangle are often aggressive in nature. So yeah, this would be my guess for this tourism stock. Yeah, so this is how I would label this stock, something like along these lines. But I can't say I'm very excited for this stock unless we break the BD trend line here, which comes in at about $3. Okay, let's take a look at one more, which is ALCN. Okay, another Egyptian stock, Alexandria Containers and Goods. Oh, okay, so yeah. Yeah, we had a couple of spike rallies which were then aggressively faded. Uh, Unfortunately, here I don't see any bullish potential at this point in time. So, especially given the corrective rally recently, as we can see, the rally from March 2020 was only in 3 waves, and it was contained between parallel trendline, very typical for corrective pullbacks. And we even had a small throw over where prices spiked briefly above the upper trend line, but then reversed aggressively lower. And the break of the lower trend line, of course, of the channel implies that the next leg down is underway. So maybe let's see if we project some targets, where would they come in? Okay, so if we project some targets to the downside, these would come in at maybe $4 and $250. So yeah, definitely not considering this to the top side. Maybe definitely I would stay bearish on this stock for sure. Okay, so I guess we have a couple of stocks more. Okay, so ROTO, Roto Pumps. Okay, this is an Indian stock. Not sure. Okay, it's what we have here is okay. I can see that we have clearly completed a sideways correction here, and yeah, a very parabolic rally thereafter. So, let me see. This rally looks aggressive, so here is what I have in mind. I don't see any issues labeling this rally as wave 3, where, let me just put some Fibonacci levels before that, where wave 1 before then was a leading diagonal, and this sharp reversal was wave 2, which is actually typical for corrections following a diagonal. They tend to be very sharp and aggressive, and wave 2 was about a 78.6% retracement of wave 1. And let's do some measurements for wave 3. Okay, so as we can see, prices exceeded the 1.618 multiple of wave 1, which is a common wave relationship. So the next most common relationship is the 2.618 multiple of wave 1. So this is the next key level we should look at for maybe a top in wave 3, and probably a corrective pullback in wave 4. So my best guess here would be that wave 3 is either complete or in its very late stages, and near term the risk should be to the downside, probably something along these lines, maybe a flat or triangle correction that should retest the prior fourth wave low near to $87 ahead of the next rally in wave 5. Yeah, so this looks reasonable. Okay. Oh, so okay, so let's see if we have, oh yeah, we have an Egyptian stock, Roto, Road Tourism. Oh yeah, so okay, yeah, to me this doesn't look good at all. So yeah, a couple of sharp rallies which were then aggressively faded. So I can't say that I have a strong opinion on this stock, but to me the risk is probably to the downside, to maybe retest this the all-time low, and maybe register a new all-time low to, I guess, ideally complete maybe a flat correction from the top here. So maybe something like this, but uh, I can't say that this is necessarily a high confidence wave count. So okay, so yeah, to me this rally looks corrective, because although we spiked above the upper trend line of the corrective channel, this rally was not sustained. It was quickly faded. And if this were to be, let's say, a couple of ones and twos, I would expect at least the central line to act as support, if not the upper trend line. So, but in this case, these trend lines are broken. So a break above this lower trend line near $9 would definitely open the downside for further weakness, and maybe worst case, probably a retest of this low to complete wave C, and maybe a larger flat correction from this top here. So yeah, this is what I have in mind for this stock here. Okay, so let me check if we have any questions left. Okay, so no more questions. So I guess uh, this is it. So it's time to wrap up. Just a quick reminder to like us on Facebook, subscribe to the channel. You can also support us by buying us a coffee. Links in the description box below. And probably next week, uh, I will be off. I will be traveling, so there will be no live stream next Sunday. So something to keep in mind. But of course, I will see you after then. We will do our wrap up as always. So thank you for watching, and I'll see you in the next one. Bye.